G'day everyone. Hope you're having a good morning for Good Friday. Can everyone just either post a comment or raise your hand to make sure that you can hear us okay? All right, yep, excellent. We've got plenty of people coming through. Okay, welcome everyone. My name's Tom. This is my brother Michael. We're partners here at Peer Wealth. Peer Wealth is business services company that operates through different industries such as accounting, financial planning, mortgage broking, self-managed super funds and the like. Today we're here to give you a quick update on the JobKeeper payment in particular. Isn't that right, Mick?
Yes.
And we left work yesterday with this update as a draft legislation, and then what happened overnight?
So on Wednesday, Parliament met and they passed the bill, the JobKeeper bill, that all passed through Parliament. But what was a bit strange about that was there was actually no rules attached to the bill. It was basically just a bill that gave the Treasurer, Josh Frydenberg, powers to make the rules. So there's no detail in that exact bill. It's basically just given Josh Frydenberg a blank check of $130 billion to do what he wants with it in the way of JobKeeper payment. So that was on Wednesday. During that broadcast or the parliamentary sitting, it was a bit funny because there was actually a bit of a leakage. Well, I think it's a leakage, or they actually posted online through the Treasury website the draft legislation, and then about an hour or two after that, they actually took it down. So that was on Wednesday. We downloaded the draft legislation and read through it, and that's kind of what we based this webinar on. But then last night, after we wrote everything, about 10 o'clock last night, they actually released the rules, which is good. So we read through that all this morning, and we on top of a lot of it, there's still a lot of unknowns in there, but that's what we're going to cover off on today, what the rules were released about 10 o'clock last night.
Yeah, so it's all relatively new, but we shouldn't be here for much longer than hopefully an hour. We'll try and get through it as quickly as possible. So we might kick off. So with
just bear in mind when we go through this, it is whilst the rules have been released, just bear in mind that they are constantly changing. So even between Wednesday when they released the exposure draft, they contained a lot of the rules, and then the rules that were released yesterday did have some minor changes. So expect every day or every couple of days for the government or the Treasurer to keep updating the rules. So yeah, just bear that in mind when you're going through this. It will constantly change.
Yeah, that's right. So quick agenda, just to rush through this one. We're going to cover off what is the JobKeeper payment all about, how do the measures apply in respect to employees, and how do the measures apply to self-employed businesses, sole traders and business owners, which the majority of people who are on here today really want to know. So, and then lastly, how does it actually work in reality, which is something that's only just been released, and a couple of questions to follow. So I guess the last thing, how does it work? That's something that we've been internally here in Peer Wealth been giving plenty of consideration across all our different clients in industries, and we try to break it down in a few different categories, haven't we, Mick?
Yeah, I think that's the key thing with these sorts of things, because it is constantly changing. You need to simplify it for your business. So the three sort of categories that we've taken down is the extreme. So if you think of maybe you're a restaurant that's been completely affected by the coronavirus changes and the lockdown measures, your income might have reduced by 100%. I think that's one end of the extreme, where you're pretty confident when we go through all the criteria that you're going to satisfy the main one, which is that decline in turnover test. If you go to the other extreme, where you've got a construction business maybe that hasn't been too affected, they've got a lot of work in the pipeline and they're still making reasonable money like they were last year and they haven't been affected, most likely they're not going to get the JobKeeper payment. And then you go somewhere in the middle where you're on the borderline of being, or of that 30% decline in turnover test, and that's the unknown, and that's the hard one to plan for and to put in place a lot of these measures, because whilst the rules are out at the moment, there's a lot of things that are still unclear. So when you're trying to decide on Sunday if you need to pay your employees $1,500 or not, the ones who aren't working, and whether you can guarantee that the government is going to reimburse you for that $1,500, it's very hard to decide when you're in that grey area whether you're entitled to the payment, the subsidy or not.
Yeah, and I guess the last thing that we want to do is to have clients think they qualify for it, and over a 6-month period, take for instance someone that has maybe 5 employees, that could equate to somewhere around the $100,000 mark. If they get to the end of the 6-month period and the ATO do ask for that money back, that could be pretty catastrophic for a couple of businesses. So it's really important, if you are in that that area where you may or may not qualify, you really need to give it some consideration, because we are talking some reasonable sums of money for the majority of businesses in that we look after, at least anyway.
Yeah, that's right. And the way I think this will work is that it will be a self-assessment sort of system, just like our usual ATO tax system in Australia, where you declare to the ATO whether you're entitled to it or not. By way of the government or the ATO refunding you or paying you the subsidy, they might pay that to you, but that doesn't necessarily mean that they agree that you are entitled to it. Just like when you get a tax refund, that doesn't necessarily mean that you've lodged your tax return correctly and you actually are due that money. The ATO will still be able to have an amendment period or a clawback period if you have received that JobKeeper payment incorrectly. So that's the bit. If you do get the money, just be aware that you need to make sure you've substantiated all of the criteria if the ATO do come knocking in 6 months' time and asking for the money back if you don't meet the criteria.
Yeah, so we'll try and, as best as possible, clarify the criteria. Keep in mind it is moving depending on when they're releasing more information, but we'll get started. So straight up, what is the JobKeeper payment?
Yes, so very simply, it's an incentive for small to medium-sized businesses to retain their employees. So the government wants small businesses to keep their employees and not lay them off. So when the coronavirus does fade away and businesses open back up, they can open back up and start making money from day one. It's a $1,500 per fortnight per eligible employee payment, which we'll go through in detail. It's for the period of the 30th of March to the 27th of September. So it's already started. The payment, if you meet the criteria, will be backdated to the 30th of March. And it goes all the way up until the 27th of September. And the last one is, which is probably the most controversial sort of area of the law or the rules, is businesses that, it's only for businesses that have suffered a decline in turnover. So the system or the scheme is administered by the ATO. So that's why we're getting pretty heavily involved in it, because that's us as accountants area of expertise. And the way it'll work is the Commission will pay the JobKeeper payment to entities or businesses shortly after the end of each month. So for any fortnight, so in the month of April, there's 2 fortnights in the month of April. The reimbursement, because it is by way of a reimbursement where you need to pay the employee first and then the ATO will reimburse you, and that's very important. The reimbursement will be in May, so there's a bit of a delay there. So how do the measures apply in respect to employees? So what happens, there's two main things that you need to satisfy. The employer themselves need to satisfy the criteria, and the employee themselves need to satisfy the criteria. So we'll dig straight into what that actually means. So for the employee side of the law, so the employer is entitled to a JobKeeper payment for an individual for a fortnight if the fortnight is between that period, so 30th of March to the 27th of September. The employer qualifies for the JobKeeper scheme on or before the end of the fortnight, which and so from the 1st of March 2020, the entity carried on a business. The entity satisfied the decline in turnover test, and the entity is not a bank, government agency, or company in liquidation. So before the end of the fortnight, you need to satisfy those 3 criteria that on the 1st of March you were running a business and you satisfied this thing, the decline in turnover test, which we'll go through in further detail shortly. And the third one, which is the important mechanism there, is the employer has paid the employee at least $1,500 for the fortnight. So it isn't a reimbursement. You need to pay the employee first. If you don't pay the employee first, you won't satisfy the employee's entitlement criteria that we're going through here. So the individual needs to be an eligible employee. That's the 4th sort of criteria that we've got, which we'll go through that in great detail. You need to notify the commissioner in the approved form in the approved time frame. So the approved form hasn't come out yet. There is a notice, there is a registration or a register your interest more, also on the ATL website, but that's not the application form. The application will come out shortly, but you need to do that to get the entitlement. You need to notify the employee in writing within 7 days of notifying the commissioner. So that's pretty important. The employee needs to know they're getting the payment. The employer hasn't notified the employer. The employee hasn't notified the employee that they no longer want to participate in the scheme. And the entity can't be entitled to a JobKeeper payment for an individual if another entity is entitled to the JobKeeper payment for that individual. So if you've got an employee in your business, they can't get the JobKeeper, and they're working for another business, they can't get it twice. Only one business that they're working for is eligible to pay or to get the JobKeeper payment. So you need to speak to your employees and find out who's getting it from another employer, and if so, not register them as an eligible employee. You can only get it for one. An employee can only get it from one employer. So they're the 8 sort of criteria under this, under the employee's entitlement criteria. We'll go through a couple of these in finer detail, which is basically the turnover test, this decline in turnover. So there's 2 main tests, the basic test and the alternative test. You only need to satisfy one. So the easy one to go through is the alternative test because there's actually not that much information on what that actually means at the moment. So we just need to wait and see what that will mean if you're going to go, if you don't satisfy the basic test and you want to meet this alternative test, how you meet that alternative test, we'll need to go through that. But basically, if you think of a business that might have been a new business and you don't have income to compare from last year, then this alternative test is probably going to be relevant for your situation. But with the basic test, you're basically comparing this year's income to last year's income. And if there's a drop by 30% or more, then you satisfy this criteria. The 30% drop is just for small businesses, small to medium-sized businesses. There's other tests if you're a registered charity or a business with or an entity with a turnover more than $1 billion. They need to meet a 50% drop in turnover, but for most of the people on the call, it's a 30% test. And it is a projected GST turnover for the turnover test period compared to the relevant comparison period. So we'll go through an example of what that actually means. So the main thing is you're comparing this year's income to last year's income. If it drops by 30%, or if the projected turnover is projected to drop, and that's the key. It doesn't need to be actual, it just needs to be your projection and what that actually means. If that drops by more than 30%, or you're projecting it to drop by more than 30%, you'll satisfy this basic test. If not, there's always the alternative test, which, yeah, more information will come out. So maybe you had a bad year last year, or maybe you're a new business, or maybe you've acquired a new business. So your turnover is double this year compared to last year, but you have been affected by the coronavirus. I think this alternative test will still apply, or could potentially apply to your business. It doesn't necessarily mean that you aren't eligible for the subsidy if your turnover is up from last year. But you just need to see what has actually happened in your business and whether you do satisfy those tests.
So I think next up we've got just a quick example of how this actually works. So in this example, Patrick Enterprises is assessing its eligibility for JobKeeper payments on the 6th of April 2020. So what they're doing is basing it on a projected GST turnover for April 2020. And in this circumstance, they're saying it's $6 million. So their projected GST turnover for April is $6 million. What they're doing is considering that the comparable period is the month of April 2019, so April last year, for which it had a GST turnover of $10 million. So obviously $6 million as opposed to $10 million is a 40% decrease in turnover, and that would satisfy the turnover test. So pretty straightforward. What we're doing here is projecting GST turnover for a period, comparing that with the previous month in an earlier year, and if that's more than 30%, then they would qualify under the turnover test.
So with that, if we just go back to the previous slide as well. So with these tests, been getting a lot of questions on how it actually works and the detail of it. So I believe it's, in terms of the period that you're testing, if it's a month, 2 months, or 3 months, the period will be based on how you lodge your BAS, the GST on your BAS. So if you're a monthly lodger, you will have to compare April projected turnover to April 2019. If you're a quarterly GST lodger, you will compare your projected turnover for April, May, and June 2020 to April, May, and June 2019. So it depends on what you lodge your GST on your BAS that period.
So we've got a couple of questions coming through. Is this on a cash or an accrual basis? Do we want to cover off on any questions that come through?
Yeah, absolutely. So good question. So it's the same sort of thing. It's what you lodge your BAS on. So if you lodge your BAS on a cash basis, I believe, then you'll be comparing, it'll be on a cash basis. If you're on an accruals BAS lodgement GST scheme, then you'll be doing it on an accruals basis. So it's whatever you lodge your BAS. Most of my clients, probably 95%, 90%, would lodge their BAS on a cash basis, not an accruals basis. So it'll be cash. And another question, which time period? So yeah, it's what you lodge your BAS on as well. So if you're monthly lodger, it's a monthly basis. If you're a quarterly lodger, it'll be a quarterly basis.
But just on that, that's what you report your GST, not your pay-as-you-go withholding.
Yeah, correct. This is GST, your GST on your income and your GST on your expenses.
Yeah, so I think the cash flow boost touched on whether you're a monthly instalment lodger or quarterly. This is solely looking at your GST, your projected GST turnover, not necessarily what you report your pay-as-you-go withholding.
Yeah, correct. Some people might report their POIG withholding on a monthly basis, but GST on a quarterly basis. So you just need to be mindful of that. The main thing with this, and the confusing part of it, is it's all based on projected income. So we're sitting here on the 10th of April, and a lot of businesses are going, well, am I going to be entitled to the JobKeeper payment? So you'd be sitting around going, well, okay, first step, in regards to the decline in turnover test, are you reporting GST on a monthly or a quarterly basis? Let's use a quarterly basis. So we're doing it on a quarterly. So April, May, June. So next is, well, in April, May, and June, let's go and look 12 months ago, April, May, June 2019, and see what our income on our June 2019 BAS was. So look at, if you're in zero, you can pull up a GST report, find out what your cash, if you're on a cash GST reporting system, find out what your cash income was for that period. Let's say it's $1 million. Then as of today, the 10th of April, you're projecting what April, May, and June in the current year will be. So it's very hard. Well, some businesses will be very hard to project, but some businesses will be quite easy. So we'll use the hospitality industry because they've been heavily affected. They know that their income might be 10, 20, 30% of what it was last year. So if they did $1 million in turnover in April, May, and June 2019, they could easily predict this quarter in April, May, June 2020, their income is probably going to be maybe 200 or 300,000 at best. Some might be zero. some might have a little bit. So in that situation, you're sitting here today, you know your turnover for this quarter is likely to be 30% or more. It's very easy that you can kind of self-assess and meet that criteria. The ones that are a little bit more difficult are the ones that you don't know whether your turnover is going to be down or not, and that's the one that's going to be very difficult to decide whether you're entitled to or not. And I think it's all going to be based on, well, my belief is it's all going to be based on what assumptions you're making when you're doing your projection. So if you are borderline, let's say you're projecting that your turnover is going to be down 35%, you want to have some good substantiation if the ATO do come knocking later, that your assumption of being down 35% is reasonable, and you haven't just done it to basically get the JobKeeper payment, because the actual turnover for April, May and June, you might actually have as good as a year as last year or even better, but there might be some of those businesses that actually did get paid the JobKeeper payment, and at the moment they might not need to pay it back. But you, in that sort of situation, I'd probably expect a phone call from the ATO asking for proof as to why you originally projected your income to be down 35 or 40%, and it later turned out to be maybe up or the same, or only down 10%. If it's only down 25% and you project it to be down 35%, then I think in that sort of situation, if your substantiation was reasonable and your projections were reasonable, I don't think you'll have too many issues with the ATO, and they've openly said that as well. But yeah, if you don't have a good enough substantiation or reason why through your projections, then that's when you're going to be in a little bit of trouble if you're just picking numbers out of thin air and saying that your income's going to be down without any substantiation. That's the key to this, I think. All right, so that's if you meet the criteria to be an eligible employer. The second bit is the employee needs to be an eligible employee. So what does that mean? So they need to be employed by the entity at some point in time during that fortnight that you're paying them. Fairly straightforward. They need to meet the 1 March 2020 requirements, which we'll talk through in detail. They need to satisfy the nomination requirements, and they don't fall into one of the exclusions. So the last two are, they're not irrelevant, but they're not as detailed as the second point. Basically, the nomination requirements, the individual needs to give the employer notice saying that they satisfy the requirements and they aren't excluded from being an eligible employee, and they're basically not getting the payment from another entity, the JobKeeper payment from another entity. So I think when we're going through this, we'll just get a bit of a form from the employee saying that they're entitled to it, and they're not, they're not getting it from someone else. And with the exclusions, the fourth point, there's a couple of exclusions, like people who are getting paid parental leave and dad and partner pay, and if they're getting maybe workers' compensation payments and the like, then they fall into one of the exclusions. But if we tick those two off, the main one is that March 20 requirement, which we'll go through now. So for the 1 March 20 requirements, basically the individual needs to be aged over 16. They either need to be full-time, part-time, or casual. So with the casual employee needs to be employed by the business for more than 12 months. There's been a bit of a comment from another number of clients that they think that every full-time and part-time employee needs to be employed for more than 12 months. That's not correct. The full-time and part-time employee only needs to be an employee as of the 1st of March. They don't need to be employed for more than 12 months by your business. Only casuals. Casuals need to be a long-term casual, which is for more than 12 months. So just keep that in mind. There's a few situations where maybe the business has changed entities, or maybe you purchased a business and and the entities change and those sorts of things, the ATO are pretty reasonable, and they've got some rules in there where if the employees changed entities in the same group, then you still satisfy the requirements. Or if the business has changed hands, maybe a purchase and sale, then you'll still be okay as well. So you don't need to worry about the 12-month rule. The last requirement is they need to be an Australian resident or a permanent resident, or a New Zealand citizen who's under a 444 visa. So if you're a temporary resident employee, you're not entitled to this JobKeeper payment. So we're getting a lot of questions about that. It's only for people with permanent residency, Australian residents and the like. This might change. I know there's been a lot of lobbying about people on 457 visas and the like, temporary residents, and getting them entitled to the JobKeeper payment. And there's also been a bit of lobbying about reducing the casual employee 12-month timeframe. At the moment, this is how it stands, but maybe tomorrow or next week or the week after, that will change. But at the moment, this is how it stands. So that's for a business who has employees, and whether the business is entitled to the payment and whether the employee is entitled to the payment. A lot of other questions that were being asked is how does it apply to self-employed and business owners themselves? So maybe if you're a sole trader, how it applies to you, or if you operate your business through a trust or a partnership or a company, but the company director or shareholder doesn't actually pay themselves a wage. They might pay themselves dividends and the like. So how does it apply in those circumstances? And previously we haven't had any detail on that, but as of last night we do now, which is good. So for the self-employed, a lot of the criteria is similar to what we just covered on in terms of the decline in turnover and the like. So a lot of that is still the same. The main difference is this thing that they've introduced called the eligible business participant, which is what we're going to go through in detail. And the third one is, the entity needs to notify the commissioner in approved form by the approved time frame, which is going to be the case for all of this. You obviously need to tell the ATO that you're getting or you're entitled to the payment to notify them that you're going to get paid. That one's fairly straightforward. Just quickly, there is an integrity rule in here which basically sets out that you need to have an ABN on the 12th of March. And you also have needed to lodge your 2019 tax return by the 12th of March, which a lot of my clients haven't. So they're going to, because that tax return isn't actually due until May. So they're actually going for this one. You need to have lodged, in a very simple sort of form, you will need to lodge BAS on or before the 12th of March for the period of 1 July 18 to 12th of March 2020. So what that basically means is if you're a late lodger and you haven't lodged anything for a couple of years, there might be a bit of a risk or a chance that you won't be entitled to the JobKeeper payment. They're not, the ATO and the government aren't worried about people who haven't kept up to date with their lodgements, I believe. So it's only if you have kept up to date with your lodgements, then you'll be able to satisfy this criteria and get the JobKeeper payment. So that's very important. So with the business participant criteria, so this is for someone who's not employed by the entity. So if you're an owner of a business, owner of a company, you might pay yourself wages. If you do pay yourself wages, this isn't for you, because you will get the JobKeeper payment through what we just covered off on the employee system. You're an employee of the business, so you'll get $1,500 if you meet the employee criteria. This criteria is if you don't pay yourself wages, you pay yourself dividends or distributions, or if you're a sole trader can't pay themselves a wage, they pay themselves profit, or a partnership, they pay themselves a distribution. So this is for them. The individual needs to be involved in the entity. And this is basically, there's a statement that says you need to be actively engaged in the business. So what that means is, well, I'm not 100% sure what it means, to be honest. I think you just need to be engaged. You need to be doing work for the business. So if you're a husband and wife, say the wife owns the business and runs the business and the husband looks after the kids, The husband isn't doing anything with the business, so he's not actively engaged in the business. The wife would be actively engaged in the business, so she would satisfy this criteria. With a lot of the grey areas in terms of if the husband did the books of the company, whether that means he's actively engaged in the business, I guess that's the detail that is a bit unknown at the moment, which we'll go through shortly. Well, not today, but once it comes out, to see if they do satisfy the criteria. But just think of if they're engaged doing work in the business, they'll satisfy that criteria. So if they're actively engaged in the business, and depending on your structure, if you're a sole trader, the sole trader, it applies to. If you're a partnership, whoever the partners are in the partnership, it applies to. If you're a trust, an adult beneficiary of the trust. And if you're a company, either a shareholder or a director. So the thing that has been released is only one person is entitled to the payment. So for example, in a partnership is generally 2 or more partners in the partnership. So you might have a cafe, runs a business, they've run the business as a partnership. 2 partners actively work in the business. They don't get paid the wages because they're not allowed to. They get a partnership distribution at the end of the year. Only one partner will get the JobKeeper payment. So they'll need to nominate that partner who gets the payment. The other partner won't get it.
And that's regardless of if you're a related party in the partnership, or is that right?
Yeah, correct. It doesn't matter if they're related or unrelated. So you might have 2 unrelated partners that are running a cafe. Only one of them will get the JobKeeper payment. In a company, you might have 5 directors and 5 shareholders of the company. If they don't get paid a wage directly, then only one of them will get the JobKeeper payment, and they'll need to nominate which one gets the JobKeeper payment. They've made that very simple and narrow just because I think there was going to be a lot. Initially, it didn't look like they were going to bring out a lot of this, although they weren't going to bring out any measures for these types of people. It was just going to be if you're an employee, but there was a lot of lobbying that went on, and yeah, they brought in these measures, but they are very narrow, so only one person gets it. There was going to be, yeah, it could open up the doors for a lot of, I guess, rorting the system if they didn't narrow it down, so that's why they've narrowed it. Is that a question that you're going to go through?
Yeah, I was just looking for some clarity on it. There was a question about what about contractors, and I'm just wondering if that was referring to contractors eligible employees. But
with contractors, so with a business, if you engage contractors in your business, they're not an employee of your business. You're paying them as a contractor, so you're not withholding. You're not withholding tax on them. You're paying them as a contractor. They won't be entitled to the JobKeeper payment from the business they're working for or contracting to. Themselves might be entitled to the JobKeeper payment under the sole trader self-employed test. So they will, if their turnover has dropped, then they'll be entitled to it themselves if their turnover drops by more than 30%, and they'll need to register themselves, but through the business that they're working for, they won't be entitled to the JobKeeper payment directly from the employee or the business.
So the contractor themselves would have to pass the test of if they are eligible for their own JobKeeper.
Yeah, correct.
Payment.
Yeah, it has no. It's not through the business that they're contracting to. It's themselves because they might be contracting to other companies.
Right.
So. Yes, so next one. So that's basically if you're a self-employed or a business owner, how it all plays out for yourself. How does it actually work? So a lot of this is still a little bit unknown, but we do know a little bit more information. So it's going to be a $1,500 per employee, per individual per fortnight payment. Key thing is the fact that the commission actually pays the entity the payment doesn't actually mean that the entity is actually entitled to the payment. They can still ask for the money back. So you just need to keep substantiation. That's the key there. The commissioner must pay the payment no later than 14 days after the end of the month, or 14 days after the commissioner is satisfied to the entitlement. So you're paying your employees during the month of April. The commissioner will pay it, will reimburse you for the wages 14 days after the end of April, so in May. So you just need to fund that, and that's pretty clear in the legislation, or in the rules, sorry, not the legislation. You must notify the commissioner in the approved form within 7 days of the end of the month. So this is the one that's causing a lot of confusion, because initially we said that the turnover test, or the decline in turnover test, is a projection. Then they've got this lodgement that you must lodge to the ATO 7 days after the end of the month, saying what the entity's current GST turnover for the month was, and the entity's projected GST turnover for the following month is. So that's giving them actual data. So if you projected your income to be down, and then when you lodge the month's actual numbers to the ATO, does that mean that you have to pay the money back or not? I think at the moment, the way the rules work is this information is not just, it doesn't mean anything about whether you satisfy the criteria or not. It's basically just giving the government, the ATO, some information on your business so they can work out how much it's actually costing the economy and the like. I think they'll use this information if you're rorting the system, basically, and you're saying your projected income is down, but it actually isn't, and you've got no substantiation to substantiate your projection. They will use this information, but this information at the moment has nothing to do with whether you satisfy the criteria or not. You still need to do it, but it's not determining whether you are satisfying the criteria. The criteria is based on projected turnover and whether that's down, not on actuals. So that's causing a lot of confusion. So yeah, I think all of this, you basically just comes back to how you're coming up with your projected turnover, making sure that you've got substantiation behind it. It is a self-assessment system. The ATO can audit, like they can always audit, and there is requirements to pay back the money if you don't have the correct substantiation and you don't meet the 30% decline in turnover test. So just be very aware of that.
There's a question that's just come through. There's a lot of mention around GST turnover. What happens if I'm not registered for GST? Am I still eligible? Which it is a very good question. I will see if I can flick back up to another slide. This is when assessing the decline in turnover. It's talking about GST turnover, and you compare it to a business activity statement for a previous period. Now, if you're not registered for GST, then you're not reporting business activity statements. And I think what that would then convert to is alternative test. Is that the way that you see it?
Yeah, I think you'll still compare it to a previous quarter, I believe. So if your turnover is down from last year, you'd still be entitled to it. The thing with a person who doesn't lodge BASs, if you have a look at the integrity rule, if you haven't lodged your 2019 tax return by the 12th of March and you don't lodge BASs, you don't satisfy this requirement. So the way the rules work at the moment is if you haven't lodged your tax return and you're not registered for GST, then you might not actually be entitled to the JobKeeper payment. I think the Commissioner of the ATO are going to be pretty reasonable with this and probably clarify that later, that if you're not required to be registered for GST, then you'll still be able to get it if you haven't lodged your tax return. But that's the way the rules are saying at the moment. But yeah, I wouldn't worry too much about that at the moment. So basically what to do next. So there's still a registration online that you can register your interest with the ATO, which is basically just subscribing to their mailing list. There's no full application form at the moment. That'll come out in the next week or so, but you can still register your interest. You need to go back and really, over the long weekend, have a look at your historical GST data. So if you're a quarterly lodger, go back to April, May, June 2019 and find out what your turnover for that quarter was. If you're a monthly lodger, go back to April 2019 and find out what it was. So that's your starting point, what your actual numbers for last year was. Then prepare some forecasts for either, if you're a monthly lodger, the month of April, or if you're a quarterly lodger, the quarter of April, May and June. So try and do some spreadsheets, get out the old Excel spreadsheet and break it down into April, May and June, put some assumptions in there. Hopefully a lot of you already do some budgets and cash flows and projections and the like, but try and project what your April, May and June income is going to be like. So if you're a restaurant and you're previously doing $100,000 a month, maybe in the first 2 weeks of April, in week 1 you might have done 5,000, week 2 you might have done 5,000. So you could reasonably project that for the month it might be about $20,000 or $25,000 of income. So then $25,000 for that month compared to $100,000 in the previous month, it's pretty clear that you're going to meet the 30% drop in turnover. So just do that, those projections. I think that's going to be your starting position. For the more difficult businesses that have some unusual sort of things that have popped up, acquiring different businesses, changing business hands, hiring new staff and growing the business exponentially, those sorts of things. Look for what they actually are and how that has distorted your turnover. And I think under the alternative test, you might not satisfy the basic test, but under the alternative test, when the ATO release some more information on that, I think you'll be trying to satisfy the alternative test. So there has been a little bit of guidance on it. If you use an example where a business has purchased another business, so they might have had originally $1 million of turnover, and then they purchased another business, and now they've got $2 million of turnover. And that might have happened, say, in December. So January rolled around and they were doing really well. They were billing, I don't know, $200,000 a month. February rolled around, they were still doing $200,000 a month. March, they started getting a little bit affected. And then in April, their turnover might have reduced to $100,000. So if they compare to April 2019, when they only had an annual turnover of $1 million, the $100,000 might be equal to April 2019. But if you compare to February, they originally had 200 and now they're down to 100 because of the coronavirus. The alternative test says that you can average out the last few months if you don't satisfy the basic test and there has been an abnormal event, like a purchase of a business. So you can average out those first few months, and the average of the first 3 months might have been $200,000, and then April your turnover is down to 100,000. So you should be able to apply to the commissioner under the alternative test and say your income's down 50%, even though when you compare to April 2019, it's exactly the same. That's how that alternative test will work. But there needs to be a reason for it, so that abnormal event.
We had a really good question come through. As this client is a physio and their revenue doesn't attract GST, so my GST income is low anyway. Would there be an alternative test in this situation? With a physio, although it may not have GST on the income, you still report that on the BAS. So although it's GST free, you would still be able to select that period and identify what your revenue was in that period of time.
Yes. Yeah. And the last action item is review your employee eligibility. So if you've got temporary visa holders, they're not entitled to it. If you've got full-time employees and they're employed on the 1st of March and they're a permanent resident and they're not getting it from another person, then they'll be entitled. So go through your payroll list, find out who's a full-time, a part-time, a casual, their resident status and when they were employed and the like, and tick off the ones that are going to meet the eligibility criteria. So they're the things that you should be doing now. So Q&A. I've got a couple of just points to make, just a couple of key points on there. So the first point, need to fund the wages costs. So the way this works, it's a reimbursement scheme. So you need to pay the employee first, and then the ATO reimburses you. So you're paying wages now, regardless of whether they're working for you or not. And then in May, the ATO will reimburse you for that. It's very important. It's very clear in the rules that that is how it needs to work. You can't wait until the ATO pay you and then pay your employees. You need to pay them first, and the ATO will reimburse you for it. So that's very important. And it's going to cause a lot of people some issues as well, because you need to fund those costs. Your business might be shut, but you still need to pay your employees $1,500 a fortnight and wait 2, 3, 4 weeks to get the money back from the ATO. The ATO have said that that's not their problem. You need to go to the bank and get some loans, but that's kind of hard at the moment as well. When you don't have much turnover, the banks don't want to give you some money. The second important point, you need to have, I've been pretty clear on this, you need to have substantiation behind your projected turnover. You can't just roll the system and project your turnover is going to be 50% down when nothing has changed in your business. You might be a builder, you might have $2 million of contracts signed, they're good customers, they pay quickly, work's done, the government hasn't said they're going to shut you down yet. You can go to work Monday to Friday and do your work. Your turnover in the first 2 weeks of April is exactly the same as March or better. How can you project your turnover is going to be down when nothing has been impacted on your business yet? That might change down the line. So you might not satisfy the criteria at the moment, but that doesn't mean you don't satisfy the criteria next month or the month after. So if Scott Morrison comes out tonight or tomorrow or in a month and says no one is allowed to go to work, including builders, and you can no longer earn any money, then at that point in time you would satisfy the drop in turnover, because your projected turnover will be nil. So then you'll be able to register for the JobKeeper payment. But as of today, you're allowed to go to work. You've got some good jobs lined up. You haven't been impacted. It's very hard to project your turnover is going to be affected. So I think in that situation, you wouldn't register. So the reasoning why your business has suffered, and the first 2 weeks of April is a very good indication of how your business is actually performing under these new coronavirus lockdown rules and economic impacts and the like. That's going to be your starting point on how you project for the next couple of weeks and next couple of months. But you need to document it, because yeah, the ATO could ask questions. And the last one is, this is still draft. Actually, I should have changed that. That was on the original, that was as of 9 p.m. last night, but not as of 10 p.m. So the rules have been released, so this is not draft, but the rules have been released, but they are constantly changing. So it doesn't mean that this is going to be the case tomorrow or the next day, but as of today, this outstands. So it's not draft.
So there's a couple of, there's plenty of questions coming through actually. There was one here, if an employee was laid off for the 2 weeks and restarts now, do I have to pay him for the layoff weeks, or is that my decision? Important thing to note here is Fair Work Act is still the most important thing. So you are governed by what you can and can't do there from an employment relation point of view. So make sure you cover off on that legally on how best to apply that layoff. But in terms of accessing the JobKeeper payment, you wouldn't, in that circumstance, you wouldn't qualify if you're not paying him while he's laid off.
Yeah, I'd just have a bit of an asterisk on the end of that, and so the first fortnight ends on Sunday. So from the 30th of March to Sunday, which is the 12th of April, that's the first fortnight. So if you don't pay the employee on the 12th of April, are you entitled to a reimbursement? I think in these first couple of weeks, I don't know if it's been released yet, but I haven't been able to find anything. I think there'll be a bit of leniency on the first couple of weeks, the first 3 or 4 weeks. If you haven't paid your employees, I believe you might be able to back pay employees, because the rules are so new and so unclear. So I think if you haven't paid your employees, you might still be able to pay them in a week or two to back pay them for the previous fortnight. and then the government will reimburse you in May. That won't be the case in May. You will need to pay your employees every fortnight. Or if you pay them monthly, you can still pay them monthly, whatever you currently pay them on. You just need to pay them first and they'll reimburse you for it. But I think they'll be reasonable in the first couple of weeks. Another question, which is a good question, is if you satisfy the criteria today and things change next month, do you have to reassess? Or will you be entitled to it for the period of, okay. So this only got released last night. So at the moment, the way it works is if you satisfy the criteria and you project your turnover is going to drop by more than 30%, and you meet all the other conditions, you'll satisfy the requirement and you'll be entitled to the JobKeeper payment. Let's use a restaurant because they're easy. So they might have no income or very little income in April. So they're pretty clear they're going to satisfy the drop in turnover. Let's say in May or June, Scott Morrison says everyone can go back to restaurants and they open back up and it's kind of business as usual, maybe a slight drop in income, but they might get back up to a reasonable sort of turnover, maybe 100% of what they were originally doing. Might even be more because everyone's sick of being stuck at home and they're out of restaurants. At the moment, the way it stands is if you satisfy it now, it doesn't matter what happens in the future. If things pick back up or there's a change in the future, it doesn't matter. You'll still be entitled to the JobKeeper payment for the full 6 months. So you might have a restaurant, they might open back up in May or June because the government lets them. They'll still be entitled to the JobKeeper payment for the full 6 months, as long as you satisfy it initially, which is unusual. I don't know if that's going to stay around or if that's going to be the case in a month or two, but as of today, that's what the rules say. You only need to satisfy the criteria once, and then you get it for the 6 months. I'd just be very mindful of that sort of situation, because in April, if you've got no income, and then May and June, you've got $500,000 of income, so $1 million for the quarter, April, May, June, and that's equal to or more than 2019 quarter's income, you'd want to have some substantiation behind how you projected that income, because it's pretty easy for the AHO to cross-check these sorts of things. You're lodging each quarter on your BAS, your income, so it's pretty easy for them to compare your 19 BAS to your 2020 BAS and see if your income is down or not. I expect that if the income is exactly the same or thereabouts or even more, and you're getting the JobKeeper payment, I'd expect a letter in the mail from the ATO saying, how did you originally project your turnover to be down when it wasn't? So you want to be very clear on how you're doing that. In a restaurant circumstance, I don't think that would be an issue, because at the moment everyone's suffering and it's very easy to project their turnover to be down, and if things do change, then it's going to be pretty well known and easy for the government or the ATO to assess that things have changed and your original projection was okay. But that's probably the key to it, I think.
Yeah, and that can be applied across any different industry. For instance, the fitness industry with gyms, their doors are shut at the moment now. It only takes one decision from the government to allow them to reopen. So April and May, or half of May, may have no income whatsoever. But then the end of May and June, everyone might sign back up to gym memberships, and turnover might actually pick right up, and you wouldn't qualify for that 30% reduction. So that may fall into the reason why the Commissioner is asking for monthly reporting as well. So if you're reporting monthly on the projections of your turnover, but for some reason halfway through that quarter, which is your eligibility period, a decision was made and allows turnover to increase, your assumptions would hopefully flow through for the monthly reporting. Although that isn't taken into consideration, it may provide some evidence if questions were asked down the track.
Yeah. Another question, one of our employees asked if she's allowed another job on top of the existing JobKeeper payment. So if they're allowed to be paid by 2 different employers? So the answer is yes, they can work for 2 different employers. They can only just get the JobKeeper payment from one employer. So if in this example, they might work for 2 restaurants. One restaurant can get the JobKeeper payment and pay them. She can still work for a different restaurant and get paid by them. She just can't get the JobKeeper payment from that second restaurant. So they can work for as many people as they want. They can only just get one JobKeeper payment. It's not income tested or anything like that.
Another question is the 1,500 payment gross, or do I have to deduct tax? If so, how much do we pay each employee? So you just need to, the payroll system that you use should be, the payroll system that you use should automatically determine how much tax is withheld. So from a business point of view, paying an employee,
I'll just go on to an easy way of doing it. You can just go onto the pay calculator website, which is pretty good.
So this is if you don't have a payroll system like Xero and MYB.
Everyone should have one, but if you just have if you're paying someone a fortnightly payment of $1,500 under the JobKeeper system, this tells you there is $192 of tax to be withheld from that payment. So you do withhold tax from it. So the employee would get paid $1,308 in their bank account after tax. So for the employer, they get $1,500 from the ATO. They get the $1,500. They pay the employee $1,308. They keep the $192 and then pay that to the ATO on their BAS under the PAYG withholding on their BAS. Bear in mind that actual PAYG rebate scheme that they've introduced, the $100,000 rebate, might actually mean that you actually don't need to pay that to the government if you're below the thresholds and the like. So you actually might be profiting from this sort of arrangement, I guess, by $192. So you still need to withhold tax. The other point to make is whether you need to pay super on it. So I'll get back in here. So with super, super's only applicable if the employee is working. So if the employee is not working, they're on leave without pay. You still pay them $1,500 a fortnight. You don't have to pay super on top of that. If the employee is working, then you need to pay super. Normal SGC rules apply. So an example where maybe an employee only works for $1,000 a fortnight, you still need to pay them the $1,500. So 1,000 is the amount that they work for. 500 is an amount that they just need to top up because the JobKeeper payment, because the minimum amount you have to pay the employee is $1,500 if the government's giving you $1,500. So in that situation, 1,000 they work for, 500 is the JobKeeper payment. The $1,000 amount is subject to super. So on that 1,000, you still need to pay your 9.5% super on that. The $500 amount, the additional amount, is optional for the employer. You can or you don't have to. So you just need to, every fortnight, find out who's working for the $1,500. If they're not working for it, don't have to worry about super. If they are working for it, you have to pay super on it.
I think that is we've answered a lot of these questions throughout the webinar, but I think the majority of them we've covered off on.
Okay, very good.
So we might leave it there. Thank you everyone for joining us. I hope you guys have a good Easter long weekend. Usually we would be back up in Forster, but because we're quarantining down in Sydney, I guess we had nothing better to do than read through the legislation last night and try and help out you small businesses as much as possible. So
I think just on that, we've got everyone's email addresses as well. So when things do change and we find more information, we'll probably either do a quick 5-minute video or write a bit of a blog or a newsletter or something like that on the changes, and we'll just email it out to everyone so you keep up to date with the changes, because they will change quite regularly.
Yeah.
So we've got all your emails and we'll keep providing you with all that information.
And there's a lot more information to follow. There was another question, what's next with the government application? That's still yet to be determined. So far we've just registered, or clients have just registered their intent to claim it. The application form is still being developed, and I would expect that to be released early next week, if not towards the end of the week. So that's still to come, along with a lot of other things.
If you want to chat through any of this stuff as well, I'm sure my wife won't mind me taking calls this weekend. So just give us a call, send me an email, give us a call. We can go through your projected turnovers and previous turnovers and all that to see if you satisfy the criteria. I've got nothing else to do.
All right then. On that note, we might sign off. Thanks for everyone. Thanks everyone for joining.
Great. Thanks, guys.